Hello, everyone, and a very warm welcome to Idwell's first Ship Finance webinar. My name is Paul Howe. I am Idwell's Digital Marketing Manager, and it is my pleasure to welcome you all today and be your co-host. So I am, of course, joined by Frank Andersen. Frank is Head of Transactional Services at Idwell and has been working very closely with the ship finance sector over the past year or two. Hello, Frank. How are you doing?
I'm doing fine. Thank you very much, Paul. Pleasure to be here.
Amazing. Definitely. So, as all of you know, today's topic is M&A intelligence, ESG advisory, and technical due diligence for smarter fleet acquisitions. We'll be going through multiple different topics today. We'll be zooming in on the ESG side of ship finance. We'll be zooming in on the M&A side of ship finance, all the while showing you how Idwell ship data and ship inspections can really aid you to make smarter fleet acquisitions, insurance decisions, etc. So a little bit of housekeeping just before we begin. If I can ask you to remain muted and your videos off throughout the webinar, that would be fantastic. And I just want to highlight at the bottom, you have the Q&A functionality. So during Frank's presentation, please feel free to drop a question into the Q&A box, and we will more than happily answer that at the end. So without further ado, I'm going to hand over to Frank, and we'll get started. Frank.
Thank you very much, Paul. Welcome, everyone, and thanks for taking the time out of your very busy schedule to participate in this brief webinar. We here at Idwell have over the past many years been doing and involved in many M&A deals, doing either a technical vendor due diligence for sellers or a buyer's technical due diligence. So my presentation here today will describe some of the best practices that we have established in addressing these challenges when acquiring a fleet of vessels, how to drive the condition improvements, how to establish some form of M&A intelligence, and last but not least, and how to get some ESG transparency on the investments and their assets. We have planned a Q&A at the end of the webinar, as Paul said, but if there's really a burning question during the presentation, then send it to the chat and Paul will try to see if he can stop me and post a question. If we just a little bit about me, my name is Frank Andersen. I have been in shipping for a lifetime. I have been working with Maersk and Klaveness for over 30 years combined. Then in recent years, I have been a lot involved in maritime technology and how platforms and data act together with the maritime industry. And last but not least, I'm kind of an M&A expert and a customer relationship specialist. So if we just look a bit about, if there's anybody in the webinar who doesn't know a lot about Idwell, then here's a little bit of main numbers on our activities. Idwell have inspected about 15% of the global fleet since 2019, which is over 12,000 unique vessels. And that gives us, as you can see on the slide, 10 million data points. So we know the conditions of ships. We know how it evolves over time, and we use that for our predictive capabilities. We have conducted inspections in over 100 countries, and last year we inspected almost half of all the vessels that worldwide that was sold, so ships that was changing hand to a different ship owner. So if just look a little bit about how we see the world today, then it's no secret for everyone here that well-maintained ships are necessary for safety, for reducing the environmental impact, for responding to business practices and business requirements, and obviously for people who invest in shipping to preserve the asset's value. The challenge here is that there's limited access to standardized data in terms of these challenges, and there's a lack of transparency for ship owners and operators and potential buyers to make efficient decisions or clear decisions based on what are the conditions of the assets that I'm investing in. So, yeah, too fast. So at Idwell, we have developed a unique approach that addresses these pain points head on by combining our extensive experience, as you can see from all the inspections we have done, with our technology and our data analytics capabilities. We provide an insight to the ship's conditions that is very detailed and is very simple in its understanding as we put grades on the different things. So as you can see here, we have 21 subgrades that covers over 500 data points that we would look at when we inspect a ship physically. And that then goes into our algorithm, and we will get grades coming out that is very standardized and therefore comparable across fleets and across the market as a benchmark tool. So there is, as you can see, we have very rigid standards in our inspections. It's very standardized. It's very simple in its context, and we use all these data in our analysis on M&A deals. So how do we then kind of standardize our inspection methodologies? We do it with our equal grades, as you can see here, which is a grade from 0 to 100 that we will give for the ship's condition overall, and we will then give 21 subgrades depending on whether it's pollution control, is deck strength, the deck conditions and hull conditions and machineries and all these different areas on the ship. So there is obviously, as we all know, a pressure on the financial security, the operational efficiency. There's a lot of regulatory compliance around ships, and there is obviously a very competitive market in this maritime, very complex industry. So as you can see, we see owners having operational efficiency, safety, liability, regulatory compliance, and these kind of things as their challenges in day-to-day. Financiers have similar aligned interest in terms of collateral value, the risk mitigation of the ship, the insurance cost, and these kind of things. So how do we as Idwal then deal with these challenges from the individual players in the market? See, we have the rigorous inspections that I was talking about a little bit earlier, where we have a very rigid system about how we inspect. These inspections are performed by experienced surveyors that are using a standardized checklist that ensure that each ship's condition is thoroughly documented. This systematic approach provides the ship owners with a very clear and accurate assessment of the vessel's highlight areas that requires attention and improvement, so basically deficiency lists. We then have, because of the huge data we sit on, we have a sophisticated cloud-based platform that kind of interact with inspection data, which gives an effective efficiency in streamlining the process of arranging and managing inspections to keep a track on deficiencies on the ships. And then when the inspection is being done, there is a very comprehensive report that will include high quality photos, which could be 200, 300, 400 photos of the ships, and then obviously a list of defects that we find on board. So basically the key takeaways here, when we look at it, that is that we actually leverage comprehensive and standardized inspection protocols, so rigid systems, and our advanced data management, which of course we have inspected so many ships. That ensures that there is a transparency of grades. There's a possibility of comparing or benchmark your ship's quality, your ship's condition against peers in the market, similar ship types, similar ships with similar age from similar shipyards and stuff like that. So if you then take a deep dive into the M&A space, so when you are as an investor sitting with an opportunity to invest in a ship, a series of ships or a company, so basically an M&A transactions, we have developed a very, very rigid system on doing M&A due diligences. There is obviously, when you're looking at buying a fleet of ships, there is a lot of uncertainties. You want to be able to rely on the data and the integrity of the inspection reports. You want to have a consistent inspection methodology across all the assets that you're buying. You want to make sure that the ships should follow the regulatory compliance. You will also, of course, as a potential buyer, be concerned about the market volatility, the earning potential of the ships. There is often in these M&A deals that we are involved in on the technical due diligence side, a lot of time and resource constraints. So things often had to be done reasonably quick, and often it's being done between the phase 1 and phase 2 in an M&A deal. And then obviously also there is, when you invest in a company with ships, you want to have the transparency and the benchmarking. How do this fleet sit compared to the market and to compare to peers and the competitors in the world. So the way we do it is we have a huge technical experience, and as I showed before, a comprehensive due diligence process around the inspection, how we do the inspections, how we standardize the inspections. And then obviously when we onboard the ships, we do a very thorough compliance check that all the compliance are dealt with. We look at port state controls, the class records. So we put all that into our inspections. And obviously we use technology. So we have a platform where when you are an M&A buyer and we do a number of physical inspections, that will be available in a platform for you to make comparison, to look at the deficiency lists, and there will also be costs related to what do we in it will think it will cost you to repair these deficiencies. So recent projects we have done on M&A involves that we inspect about 20 to 30% of the physical fleet available for sale. And we then use our technology to predict or estimate the grades or the condition of the remaining ships by taking out a sample set of ships from the existing fleet that is in the M&A deal. So similar ships, from taking the oldest ship, we inspect the youngest ship, we inspect different categories of ships, or the different ship types that are within the batch of ships. And then we use that to benchmark against the ships we don't inspect, and then we correlate and use our data and inspections on all the other ships we've done to give an estimate on what we think this ship's condition will be. That way we save a lot of time and a lot of cost, because we don't have to inspect physically an entire fleet, but we take a sample of about 20% of the ships, and then we try to divide that over a representative number and types of ships in the deal. So one reason, to illustrate that, one recent project we did here was that there was a deal, an M&A deal, where we, on behalf of the buyers, had to look into 118 vessels. So what we did was we inspected 24 in accordance with kind of what I just mentioned, that we take out a sample set that is representative for the entire fleet. And then we do 94, in this case, 94 remote reviews, where we will look at class records, we will look at port state control records, we will compare the ship with other ships in our database, and then we will give a remote review of that particular ship. So that is a grade, and then of course, if there are any red flags to be raised on issues on the ships. We use an AI model we have developed based on our data set to predict or estimate grades on ships that we do not inspect, and then we enrich that with the documents that we can get from the ship class records and port state control records. So in this particular case, the fleet achieved an average grade of 77, which is above the industry standard for this kind of type of fleet, which was 75. And then we listed the deficiencies. The key issues was for some engine room defects and hull corrosion. And that obviously makes it easier for a potential buyer to when the negotiation goes on in stage 2 or phase 2 of the deal, to have a much better view on what cost are we faced with if we take over this company. So the key takeaway here is that Idwell is using a very standardized and AI-driven approach to our ship inspections, and using our data reliability and consistency to give the grades and the conditions of the ship, and make sure that when you buy a company with a fleet of ships, that you are fully aware of the conditions and the possible cost on OPEX and CAPEX that you might be faced with. So last but not least, as Paul said, we're gonna give you a little bit of insight on how we look at ESG and transparency. Obviously, when we look at ESG, it's for us, it's on an asset level, so on the vessel level, and here we are looking at decarbonization. We're obviously looking at crew welfare. We are ensuring that the data quality and accuracy comparable across different ships and operations are aligned. And again, the ESG reporting is living up to standards for ESG reporting. And often we see in these M&A deals that the ESG on asset level then builds into the overall ESG evaluations that a potential buyer will do of the entire company that they're looking to buy. So when it comes to ESG, it is very hard to get an accurate assessment if you're not on board the ship. So ESG, obviously, we do only on ships that we physically are inspecting. We have developed a standardized reporting around ESG, and that will give you this integrated insights to how we see that ship in relation to decarbonization, crew welfare, procedures, and processes on board the ship. It will published in March this year a social impact report, which was based on our inspections of ships from 2022 to 2023 for 5 main ship types, as you can see here: bulk carriers, containers, gas tankers, general cargo ships, and then normal tankers. We base it on 10 pillars of social standard, and each pillar contributes then kind of to the overall social impact we see on the ships. And we did notice, and these are for all the ships we inspect, we have done this. There are some big areas for improvements, and as well as some positives, which we registered during that. And just if you are interested, this report will be available, so you can either reach out to Paul and myself, or I'm quite sure it's also available on our website. So a few conclusions from our social impact report is that the best ship scored a score of 87.7. So basically, we rate each pillar from 0 to 10, and then obviously we see which one scores the highest. The lowest score here was a 34.7, which was a general cargo ship under Mongolian flag. And to the right-hand side on the graph, you can see the distribution of the grades. So the SIS, so the social impact score grade of 72.4 is an average, and you can see the distribution here in the table to the right-hand side. If you then look at the 10 pillars individually, we can see here there are 2 outliers in the sense of they are not very good. That's connectivity on board ships, and then it's recreational facilities in terms of gyms and other ways of doing recreation on board the ships. And then if you look at workload and seafarer development and facilities, they are all pretty high up on the scale, and as you can see, marked with dark green colors. Again, we can then deep dive into the different flag states, which flag state is doing better than other flag states. We can do which P&I clubs, the ships we inspect, which P&I club were they in, and which ones are doing better than others on the scores, on the social score. Again, ship managers, we can do that, and we can dig very deep into these kind of ESG or social scores. We then try to see how our social impact score actually correlated with the Seafarers Happiness Index. And if you can see on the graph here, the dark green is the Seafarers Happiness Index, and the kind of lighter green is then ITWEL social impact score. And you can see they are pretty much correlated and aligned. So we think that we have found a very strong methodology to actually measure welfare on board the ships. So we see when we do M&A deals, we see there's an increased interest and an increased need to have a much better knowledge about the ESG on board the assets, which is needed for an overall ESG of the company that people are looking to buy. So this is something we see we do more and more in M&A deals, is actually do an ESG report on the individual assets that we inspect. And once you have inspected 20% of the ship, you will, and you get an ESG report from those 20% of the ship, you will probably have a pretty good idea how this company and owner is actually operating with the ships. That was me. So over to you, Paul.
Amazing. Thank you, Frank. Really interesting. I just want to highlight one of the things that Frank spoke about there as well is the social impact score. Idwal are one of the only inspection house that is currently has a massive focus on crew welfare and social impact in general. Of course, with ship finance, that is one of the most burning questions at the moment. It's not just about decarbonisation, it is also about the welfare of the crew as well. As Frank also said, if anybody would like a copy of the social impact report, please message myself or Frank, and we're more than happy to send you a copy and also talk you through it. And as you saw at the end there, we really can go into granular detail. So obviously there we can rank on a social score flag states, we can score managers, and when you're approaching a large scale M&A transaction or a insurance deal, etc., in today's world, those insights can be very, very, very useful. Am I buying a fleet where the crew are mistreated? Are we buying a fleet where the crew are looked after well? These are really important questions in the industry today. So yeah. Okay, so on to the Q&A. A huge thank you to everyone who submitted questions. I've got quite a few to go through, so I will get started. So what we're going to do is I'm going to ask the question, and Frank is going to respond with his answer. So one of the first questions, Frank, that we've got is, on average, how long does an M&A inspection regime take? So from sort of like, the initial meeting to project completion, what has been your experience with that?
The standard experience is that we're always in a hurry and in a rush, as I said earlier in the presentation. So the build up to starting an M&A process can be months before people they start lining their docs up in a row, all the advisors they need for the M&A, and then once all that is done, they all of a sudden will come back and say, okay, we will have to get started now. And normally the time frame is 6 to 8 weeks for most M&As. We are presently working on an M&A where the potential buyer, before giving a bid, wants to have an initial finding. So we have then done kind of a bit of desktop analysis and analysis, not physical inspections, but a lot of what we can do from the desk. So we will be able, after 2 weeks, to give kind of an idea what we're looking at, by having inspected the class records and looking at the post-date controls and things like that. And obviously also looking at our database for similar ships and how does that normally fare in conditions. So 6 to 8 weeks for a normal one, but some wants a little bit of an earlier findings to see whether they want to proceed with the process or not.
Amazing, amazing. So following up with that, we've got another good question that's come in. So obviously 6 to 8 weeks for an average M&A inspection program. You mentioned 20% earlier, and one of our attendees has asked, what is a good ratio between physical and remote inspections? Is it a hard and fast rule just to go with 20%, or? Yeah.
No, it's a good question. I mean, obviously, if you buy a fleet of similar ships, so if a fleet of only tankers or only bulkers or gas carriers or offshore ships, then maybe you don't need as many if they're very similar. Then you may be able to inspect less. But if you buy a very diverse fleet of 5 to 10 different types of ships, you want to see a couple of each of them, and then you end up with a 20%. So it's not a hard and fast rule. It's kind of, we sit with the potential buyers or the potential sellers for vendor due diligence and help them decide what is a good sample set for this particular combination of ships and the fleet size and the different types of segments in that.
Yeah, and I presume you have to be quite realistic in terms of that. At the end of the day, if you've got a fleet of 100 ships operating globally, we can only get boots on deck on so many. So
exactly. No, exactly that. So it is a dialogue that we take with the clients on what we think, and then if ultimately the client will decide what they will feel comfortable with, and that could be more or less than we recommend, obviously.
Amazing, amazing. So, following up on that, this is a bit more of a specific question. And just before I say this, fleet age definitely does, of course, play into the IDWL grade. An older ship is likely to have a lower IDWL grade because of its age. But one of our users has asked, what role does fleet age and modernization play in M&A strategies, given the industry's push towards decarbonization?
No, it plays an important role, as we said, when potential buyers are looking at fleets. And some of the questions that we are asked when we do the M&As is, you know, if it is older ship, they want to have a decarbonization report to see, what is it that we're up against in terms of decarbonization. Including in that decarbonization report, we will put recommendations on how you can improve it. And that obviously goes into the CapEx, capital expenses projections and recommendations that we will give in this case. And say, if you want to lifetime extend these ships and with a commercial good value, these are the things you can do to reduce the decarbonization from the ships.
Amazing. So that's basically extending the longevity of the vessel through.
Yeah, we're often asked to come up with some ideas on what would it cost to keep up with the present regulations and the expected new regulations, and at the same time also to lifespan extend the ships to still be competitive.
Amazing, amazing. So following up on that, this is a bit of a trickier question. So, how, in terms of ship finance, how do you balance the cost of ESG retrofits with the financial objectives of an acquisition?
That's again, and it boils down to an ROI calculation, I guess. As and then again, and what kind of lifetime extension do you believe that you're gonna achieve by investing more? Is it 5 or 10 years? And what are my, depreciation strategy and my depreciation policies within the company? So, often when I talk to ship owners, if you do CapEx to improve the ships, we're talking, 2, 3 to 5 years depreciation periods, I guess.
Yeah.
Again, depending on how old the ship is, naturally.
Yeah, definitely. And that's from what I see on Tradewinds, Splash 24/7. That is very much a hot topic. Obviously, decarbonization is the hot topic at the moment, but balancing the cost of decarb and ESG are also probably just as high.
No,
It's
absolutely.
a minefield at the moment. Amazing. So, actually, we've got one final question here. So, sorry, let me just grab this. So, how can fleet buyers effectively assess a vessel's compliance with evolving ESG regulations during acquisition? So, I think that question is very much, say if we start an acquisition in Q1 2025, how can we deal with ESG regulations that change before the finalization in, say, Q3 2025?
I mean, we do help, and we do go in and give our views and opinion on that. We can obviously only relate to known regulations and not what the future expectations will be. We, for instance, the Poseidon principles have put down or sat down or established a committee that needs to look into crew welfare and how they want to deal with that as lenders to shipping. How do we want to deal with it? What kind of requirements will we put on our customers or the lenders? And we wouldn't know what comes out of that, but we know it's a focus area, and we know what are we measuring is important areas, and but what ultimately will come from the lenders in terms of requirements, you need to have an ESG score from it, well, of minimum whatever. It's
Yeah.
hard to say, but there will be more pressure on it, and so obviously there will be more focus, and people hope. Our hope is in it will that the shipping community somehow will find a standard across the board that we all kind of relate to, and that is a minimum requirement. But
Absolutely, and I hope you don't mind attendees, but just tacking on to Frank's answer there, and this might seem like a hardline sales pitch, but at the end of the day, having a strong and impartial technical partner like IDWL and associated competitors, it really takes the headache out of keeping a close eye on those ESG regulations. At the end of the day, IDWL has more than 500 surveyors on the ground across the globe. You know, we have an operations team and a technical team internally that is keeping a close eye on upcoming regulations. Our head of technical, John Nicholson, is dealing with this as we speak. But having that partner be able to take that headache out of that ESG process, from what I've seen, has really helped our ship finance customers and partners really, you know, push themselves forward, as in like they're receiving intel from ports, regulatory outfits, etc. You know, so, and all of that surmises into absolute trust in our reports and our results. So
Couldn't agree more, Paul.
amazing, amazing. So that is actually the last question we have had. So I just want to thank everybody for coming. It's been a lot of information very quickly. So if you have any questions regarding today's topics, if you want to discuss maybe a project or anything like that, please do not hesitate to reach out to myself and Frank. We will, of course, follow up this webinar with a YouTube video of the webinar in case you want to refer back. And in that YouTube video on the description, we'll also feature myself and Frank's email addresses so you can get in touch if needs be. Following the webinar, you will get an email from Zoom directly. That will be the video on demand. Again, if you have colleagues that you think might find this interesting, please forward that on to them. But other than that, I just want to thank you all for attending. It's been a really good session. I'm very surprised that we managed to fit all of this in just over 30 minutes. But anything else, please let us know. And until then, we'll keep you posted on the next webinar. We've got some big news coming up in 2025, and we cannot wait to share that with you. So until then, I'll say goodbye.
Goodbye. Thank you very much.
Cheers all.